All right, gang. Happy Tuesday to you. Welcome back to the live trading room. Andrew, what's going on, man? I hate this time of the year because we get the daylight savings time. And again, don't get me started on the whole daylight savings time thing in general. But I wish if we were going to do daylight saving time, I wish we would all just do it at the same time. I wish it wasn't the US does it this week, then what, 2 weeks, the UK does it, and another week after that, someone else does it. If we're going to do it, let's all do it at once. Therefore, people that work in international businesses, which everything is almost an international business right now, don't get confused. Again, I gotta remember to talk to Greystone. We gotta get some clarity about the coffee break tomorrow because I have a feeling, and we've done this before, that I'm going to show up an hour early. He's going to show up an hour late. We're going to miss each other. It's going to be weird until things get back on the right schedule. But it is what it is. Yeah, it is a pain for trading. Andrew says a pain for trading. Now I have to check the 4-hour charts an hour early. Yeah, that's why I focus on my chart and nothing else. Andrew says, how come trading time is based off US? Britain was the first financial center, therefore I would have a trading time. Well, you could base it off UK time. You can change it. It's based off the US because we're the best, obviously. Duh, right? But you can change it. And honestly, I don't really have a problem with the change. You can make the case that you want to be aligned with quote unquote, I don't even want to say the majority because that may not even be us here in the US, but most of the people. But you can change it. Again, all that matters, and this is why we say trade what you see. All that matters is that you trade what you see in your chart. You can't change the closing time of your candles, Andrew. What platform are you using? Anyway, while we're waiting on that, welcome to the live room, guys. It is exciting to be back. I've been away for a week. Came back yesterday for a beautiful Q&A session, which was good because we haven't had a Q&A session for 2 weeks since I've been on the road a lot. And today's trade of the day is going to follow up on yesterday's Q&A session. So if you guys missed it, right, I had to shoot an email out this morning because one of our traders who asked the questions missed the Q&A. We did a Q&A session on the CTS. Well, we started off on reading ebbs and flows of the market and had a discussion between having a strictly rules-based way of reading price action versus more of a artsy type of way and the pros and cons of that. We then went into talking about CTS trading. CTS trading stands for Combined Technical Scoring. It was a technique that my trading mentor taught me, and basically it is a way to quantify what you're seeing in the market. So if you're learning how to trade, you're probably learning a lot of techniques. You're learning this, you're learning that, you're using this indicator, using that indicator. And one of the hardest parts, one of the hardest hurdles or obstacles that a newer trader has to get over is understanding what to do with all this information, right? Let me ask you guys this. When you guys first started trading, did you feel overwhelmed with the amount of information? I guess after you got past like the weird part of like not understanding what everything is, did you get overwhelmed with a lot of information? I did. Right. I went to babypips.com. I was one of the first places I went to, and nothing against Baby Pips. I think Baby Pips is a great resource. It is very similar to the book. I'm kind of forgetting the name. What's the Thomas Bukowski book now? The charting pattern book. I'm having a brain fart. Been too much beach time, right? Encyclopedia of Chart Patterns by Thomas Bukowski, right? Meaning that it is a lot of information. One can say it is almost all the crucial information that you need to know. The problem is, in order to be a successful trader, do you need to know / use all of the information out there? This is also one of those bigger misconceptions where it's like the smarter I get, the better trader I will become, or the more knowledge I have, the better trader I will become. It's not necessarily true. Very similar in businesses, right? If you're a business owner, the more knowledgeable you are, the more information you have doesn't necessarily make you a better business owner. You could be just as good, if not better, just being very, very good at a very niche type thing. But we don't know that as younger traders, right? So we assume that in order to get better, we just need to learn more information, feed me more information, learn, eat all this information up. And what happens is we get information overload, where either we learn so much information that it confuses us and we don't really know what to do, or we learn so much information that we don't know how to put it together in a usable way because there's just so much of it. And then we go back to, if you ever been to one of our workshops, right? If you ever been to one of our workshops, FinVid as well, you'll see we always show the chart of like the chart with like a million indicators on it and a million lines, right? That was literally my chart, where every time I would learn about a new indicator, I'd plug it into a chart. Every time I learned about a new like pivot point or moving average or Fibonacci, I'd plug it into a chart. And then before you know it, my chart looked like a Picasso. It looked like a painting, a picture that didn't make any sense. So that's one of the trouble with baby pips. Again, good resource, but like anything, it's about how you use it. So when I'm not going to recap my whole story. You guys can listen to the Trading Coach Podcast, episode 000, if you want to hear it. But when I finally kind of admitted that I needed help with trading and I sought mentorship, one of the first things my mentor did, or one of the first things I flocked to, I should say, within the program was the CTS system. Because it took what we were learning, right? So we learned all this stuff, and it took what we were learning and it quantified it. Basically, it made it into a checklist and assigned each thing a score value. So this was worth this much, this was worth that much. And it organized it in a way so that not only can I choose what I wanted to use and what I thought was helpful, but now I was consistent in scoring it. So I knew that when I saw this certain thing on a chart, it was worth this many points. This many points equaled a good trading opportunity, so one that I can take. If I saw this and it only gave me this many points, then that was a bad trading opportunity. I couldn't take it, or I had to wait for more. And it basically brought a method to the madness. So we call that, the CTS system. Now, back then, it was a strict set of a few things. How I teach it now is a little bit more looser. That's just my personal trading style, where you can add things, you can take things. The point is you want to take what's valuable to you, put it in that checklist, and then use it. And that's why it's really unique to the person. Andrew says, at the very beginning, what I found frustrating was that in the video, everything is drawn out in lines. You think, yes, I get that. But you go to the chart and it's all choppy, hard to filter through. Yeah. Real life charts are a lot different than training video charts. Would you guys agree? They're a lot different than YouTube tutorial charts, right? I used to do the same thing similar with books, Andrew, where I would read a lot of books and like technical books, and everything on there looked so picture perfect. Like triangles looked so beautiful and pennant patterns were so amazing. And I'd try to find them in the real charts and I'd be like, what the hell? This looks nothing like the book. But if books are picking out pinpoint, the best examples to show you, which isn't necessarily a bad thing. They got to teach you somehow, but it is good to get experience in both ways. So CTS trading, this is a good follow-up to yesterday's Q&A session. Again, if you didn't see the Q&A session, make sure you do it. It is recorded and posted for you guys. But we're going to start on the dollar-yen today for the trade of the day. And we're going to talk about a CTS setup. So we're going to go through an IPDE process. If you guys are new, remember the first trading breakdown or walkthrough here is live streamed on YouTube and TradingView. By the way, hit that like button if you haven't already. We want to keep that 1-to-1 ratio. But we go through a process here at Tier 1 Trading called IPDE, Identify, Predict, Decide, Execute, where we start off by just wanting to get a lay of the land. Now, I'm not supposed to show you other charts here on TradingView, but I'm going to show you something really quick because this makes life a lot easier. If we go over to our dollar yen here on my Ninja Trader, and we just go to our daily time frame, right? Something stands out here, right? What do you guys see? Where is price currently trading at? I got to go back to the other chart soon because I don't want to get in trouble with TradingView. But you see a big red box, right? Structure. Now, again, what I love about these VS1 levels is that it gives me perspective. This tells me that, hey, Keel, you should look left. Whereas if someone is getting lazy and you're just looking at your chart like this and you're not looking left, you probably see this as a full-blown bullish trend, right? And this is a massive difference. If you're just looking at it from this perspective, you're saying, oh my gosh, new structure high. We just broke out of consolidation, trend continuation. Let's get bullish, right? You look at this, you're like, let's get, oh, wait a minute. Nah, there's something there. So very important, especially if you're someone that sometimes gets lazy with their analysis. But I always recommend scrunching up your charts, zooming out, look left, structure leaves clues. You can see we are at a previous level of structure right here. Nice little double top action. So I'm going to draw me a horizontal line just for a reference point. And you can see price action is at structure. Now, what's cool about this, especially if you know me personally, is that we put in a very aggressive move out there. I guess I forgot to talk about the news. Pause real quick. Tomorrow's our big news day, but we got PPI coming out today. Sorry about that. We'll do real quick. Tomorrow's our bigger news day with our FOMC statement and our rate change for the US. Not as big of a rate change as what it once was supposed to be, but our rate change and FOMC press conference. The press conference is going to be big tomorrow because the rate change is what it is. We knew it was coming. We knew it was adjusted. That's not going to be any type of difference maker. The press conference is because the market wants to look at, hey, what are we doing going forward, right? The idea is that we're going to have many increases. What are those increases going to be, especially with the war situation going on where things are becoming a little bit more cautious. So tomorrow's the big day, but we do have PPI coming out today at 8:30. Sorry about that. Been away for a week. I'm out of the loop. But going back to this, right? We came straight up. So what I like about a straight shot up is that it gives me room to operate, right? I'm a structure-based trader, is the centerpiece, the backbone, the spine of everything I do trading-wise. So when I think about targets, they always have to come at previous levels of structure. So knowing that we didn't stair step up here and create all types of weird levels of structure, right? We've got opportunity from where we're trading at right now all the way back down to 116.41s, which is a pretty decent amount of room. So what made this the trade of the day for me is that not only was this a trade at structure, which is something I like, but it also offers the opportunity to profit. And that is something that is needed in trading, the opportunity of profit. While we're here, you notice any other type of pattern, guys? Real quick, Nigel on YouTube says, hey, Keel, thank you guys for chiming in on YouTube. Glad you can get this experience. Says, Keel, I'm trying to use volume more in my trading. I noticed you use a volume indicator in TradingView. How do I get that indicator? I looked it up, but I can't find it. So honestly, any volume indicator will work. I use this one because I like having different colors. They mean absolutely nothing. It just makes it a little bit easier on the eyes to tell the difference between kind of different levels of volume. But just go to indicator box. You can look for any volume indicator. This one at the bottom is called volume spread for VSA. But any volume indicator will do the same thing. Again, my philosophy, it's going to sound weird, but like if something's on, like if I got to look at these darn charts all the time, I want to look at something cool. So that's why you see like blue backgrounds and stuff like that. But the type of indicator you use doesn't really make a difference for your volume. I just like cool colors. It works exactly the same, Andrew. Exactly the same. The difference is the thing is with, and just do kind of a brief thing in volumes, we've had this rant a million times. I was highly against volume in Forex because there's no central market, so there's no true volume. The only true volume that you get is per your data provider. Now, over the years, two things have happened. I've kind of changed my stance on that. One, the amount of data providers in Forex has significantly reduced. And I understand the importance that, or I guess the fact that you don't need the quote unquote true volume in order to do analysis, right? Because most data these days are going to be the same. What you're looking for mainly with volume is not the number, right? It's the comparison. And therefore the actual kind of real number isn't as important because you're making comparisons from one time to another, or literally one candlestick to another. Yeah, so it's the data comes from your specific broker / data provider. Yeah, because there's no way to get a true read for everyone out there. But in these days, again, there are only a handful of brokers, unless you're using someone really, really weird. So the volume you get is going to be a pretty close match across the board with all brokers. Again, unless you're using like some shady, weird broker that's, manipulating the market somehow. You missed all my volume rants. Andrew, where have you been? But anyway, so let's look at this situation right here. Yeah, man. You're a year late on this. 2 years, right? We've been looking at volume for 2 years. This is year 2. So we've come up to previous structure. Let's go down to our lower time frame. I know that I'm looking for short opportunities, right? Why am I only looking for short opportunities at this time? Who can answer that question for me? And hello, TradingView. Thank you for joining as well. Why am I only looking for short opportunity? Yeah. Go back if you want more, Andrew. Go back to the Q&A section. Just search volume. There's a few more than a few lessons over there as well. Yep. Only looking for short because we came to structure. We did not violate structure. So until we do violate structure, there's no need to look for longs, right? Don't jump when your head is close to the ceiling. So we're only looking for short. So what we did right there, especially for you newbies, right? We have really focused on what side of the market that we want to focus on, right? Instead of coming into the market and asking ourselves a million questions on why we should get long and a million questions on why we should get short and splitting our energy in half, we are concentrating all of our energy on a single idea. How can I get short? Yep, previous structure resistance. So let's go down to a 4-hour time frame. And you can see that, again, this is a structure zone. I only drew a line here, but if you remember what you saw on the bigger chart, this is a zone. So we are in structure, right? We came up, massive overboughtness on the RSI, the relative strength index, right? So you can take I'll draw an arrow here, boom, for overbought. We've completely engulfed that candle. So for an aggressive trader, I forgot whose plan we were looking at yesterday, but this might have been an entry reason for that trader in their trading plan. This could have been an entry reason right here, this lower low, lower close, right? If you're not that aggressive, or if maybe the risk reward doesn't work with that, I'm just curious to see what the risk reward would be. What's our ATR here? Is it 30? Yep. So let's check it out. Let's say you got short right at the lows here. And let's assume you're shooting for here, because that's where I was shooting. Looks like a 618 as well. I'm going to be a little bit shy of that. Sorry, random Akil talk. Get used to it. This is what I do. Yeah, a little bit shy of a 618 actually. Right around a 50%. So maybe adjust a little bit higher. Anyway, if you're using a 1 ATR stop, let's see, our highs are at 46, 118.46. That's the easy one. That's going to take us to 76. You're looking at a risk reward that looks like this, almost a 1.5 to 1, right? Pretty decent. But if you're not looking for this aggressive entry, what is the next entry that we can look for? Yeah, maybe a double top. Maybe the market takes one more shot at this level. The buyers feel rejuvenated. They feel encouraged, inspired. They try to shoot it up again. Maybe they win. Maybe they get rejected for a second time and we get a double top. With that double top, we can also look for two things on the RSI, or we already have overboughtness. We can look for RSI divergence as well. Real quick, going off the trading plan we broke down yesterday. What else do we have here on our RSI? This was in our trader's CTS score. A special added portion of it. Yep. The RSI swap directly from oversold to overbought. I'm always going to say those backwards. Forgive me. You know what I mean. So you can add that as well. But yeah, we get a double top. Maybe gives us a better entry. Stops aren't going to change too much because that ATR really won't change. If anything, it'll probably get a little bit lower. And you put yourself in an even better position where you can have almost again, we don't know where it's going to close at or if it's going to close. But if it closes anywhere in this area, you're looking at a 2+ risk reward, right? You guys see this? If you get a close at the very highs, you're looking at a 5-to-1 risk reward. You get a close down here somewhere, you're looking at about a 2-to-1 risk reward, because that stop loss isn't going to change too much. That ATR isn't going to change too much. So you guys starting to see why this is was my top trading opportunity for the day? Yeah, I like it. It's at structure. I know exactly where I'm wrong, right above here. There's room, because it was a straight directional move. It provides a lot of room to my target area, which is down here. And I guess you can be conservative. We can talk about that if you want. Now all we need is the risk reward. That's all we need. Now, I would have loved to be aggressive with this as well, but we did not probe structure. That's important to me, right? Because we do have a 1-to-1 plus on this lower low, lower close, but we did not test structure. That's something I need to see for that aggressive entry. So we didn't do that yet. So I've got to wait for the conservative one. So we'll see what happens. Again, some adjustments we can make on targets. If you want to be a little bit more conservative, we take a Fibonacci retracement, swing low to swing high, maybe adjust it up to the 50% level, right? That gets us above 116.5. That also gets us above that 50% retracement, right? There's no point in shooting for, in my opinion, 116.43, which is a lot more riskier, when you can shoot for 116.60s, right? Is 20 pips that much of a difference in this situation to be a little bit more safer? Not really. Don't be greedy. Any ideas for more conservative targets, if anyone's looking for more conservative targets? How to keep stop loss? Is that a question? How to keep stop loss based on ATR? Sorry, a little bit late. Or she says 117, so psychological number, going for the 117 even handle. That's right at the 382 as well. Yeah, not a bad idea. And again, you're still getting a quality risk reward out of that as well. Shoot, you know what you can even do? I mean, you can go 382-618 with your secondary targets. Or she says there's an inside bar pause as well. It's a very good find, Dorsey. I didn't even notice that. Very good find. Yeah, the little pregnant pause here with your inside bar. Yep. You go down to a lower time frame, that's going to be something like that. That's a very good find. Yeah. I did not even notice that. Here's a zoomed in look. Very good find. Yeah. That's a good level. Good job. Yeah, I didn't see that. Look at that. Well done. That's why we have a trading community. More eyes on the market, less things we miss, right? More ideas we get, the better we grow. So, cool opportunity here. Any questions before we move on to our next one? YouTube trading view. I'm going to kick you out soon. Unless you have any questions, I'll give you a little bit of time because there's a delay, but you won't know that because by the time you hear me talking about the delay would have already happened. But in the meantime, while you're waiting, hit that like button. We're going to be here every morning, well, Tuesday, Wednesday, Thursday, 7:30 a.m. for this first session. So feel free to join and share with a friend. Lazzy says, that was a question. Thanks for, okay, so I did answer the question. How to keep stop loss based on ATR. Okay, yeah. Perfect. Glad I answered it. It's always good when you answer a question before you even read the question. It's when you know I'm in your brain. All right, so looks like we're good here on dollar yen. I think this is a really good opportunity. The only negative side is that tomorrow is a very busy day for the dollar, a very news-related day for the dollar. So if we don't get this today, it may be tough to get a fill, but you never know. Live room members, any place you would like to go to next? We got some patterns in the market, Euro, dollar, Aussie, Canada that already occurred, but we can go look at those. Aussie, Canada may offer a second chance. I've got New Zealand on the radar as well. But let me know if there's a place you want to go to next. Type it in. We'll head there. If not, I'll choose one of mine. YouTube Trading View. I will see you guys tomorrow, 7:30 a.m. Remember daylight savings time. Hit that like